Another week, another recap. If you're new, my name is Nagman, and I give a weekly recap of my stock market portfolio where I try to grow my portfolio by holding long term positions and using covered calls and cash secure puts to generate extra cash for my account. So now that we got that out of the way, this week was definitely an interesting one. The account barely broke even for the week. As you can see, it's 0.07% up for the week as compared to the SPY, since that is our benchmark, 0.017. Slightly behind, not too much, but I will still take that. It's not the worst thing that has ever happened. It'll happen every now and then, but like I said, I'm happy with this. As I was mentioning earlier, I use my long-term positions and use option plays to grow this account. Even though we're slightly down on the week, let's not lose sight of what has actually happened year to date, where we are at 19.61%, while SPY is at 9.52%. So we have close to a 10% lead, which I'm still happy with. It's nice to be up on the weeks. We don't want to be too down, or if we are too down, we don't want to have too many of those 2 down weeks, because then we will start to lose this lead. But for now, I am pretty okay with this. As I was mentioning earlier, I have my long-term positions, and I use my long-term positions to sell covered calls and use my cash on hand to sell cash secure puts on stocks that I do want to own long term. If I get to own these stocks, great. If not, I'm collecting premium on a regular basis, and that is how we grow. And in this case, for this week, it was really the option plays that really saved our account. If it wasn't for our option plays, I think we would have been closer to being down almost 0.5%, which would have been devastating. So let's take a look at our option plays for this week, which were actually exercised on last Friday, where I had sold a few covered calls and a cash secured put. And as you can see, on August 15th, I had sold a Google covered call for $210 strike. I sold a AMD covered call at $182.50 strike. We sold a covered call on the PayPal shares that we own for $71 strike. And we also sold a cash secure puts on PayPal for $68. So altogether, 50 plus 59 plus 227 plus 235, that amounts to $571 that we had collected just by using our existing positions and using some of the cash on hand to generate more income. And guys, all 4 of these expired worthless, so I got to keep all of that premium. So the $571 that I mentioned, that is actually factored into the 0.0% gain that you see here. So this is what I'm talking about. If I didn't have this, we would be in the negative about, I don't know, like $400-ish, something like that. Because we collected, sold the premium on our positions and did the cash secure put, we gained that, and we tried to maintain our portfolio at the very least, right? So this is the power of utilizing options in your portfolio in a safe manner to maintain balance and outperform the market in the long term. So let's take a look at our stock holdings. As I was talking about, we have 100+ share lot of Google sitting at 206. I will probably be looking to sell covered calls on this again in the upcoming week. We'll see. Same thing goes for AMD. Anytime I'm seeing these pops close to the stock market all-time high levels, I am selling away and collecting the premium that I can, because I just don't like the market behavior at this moment, even though we just had some indications from the Fed that we might actually get a rate cut. I would be okay with these getting called away at the strikes that I was selling earlier. So let's see what happens. I think PayPal is in the same boat where, but I am a little bit more conservative with this. I feel like this is something that has a lot more room to grow, but it may not actually happen in the short term. So this is something that I'm comfortable holding for a couple of years if it has to be that way. On the other hand, I have UPS, which have been very conservative with because I'm very deep in the red. My cost basis for this one is $101, and as you can see right now, it's sitting at 88.79. So we got some long way to go. I'm not exactly sure if I want to continue holding this, sell another cash secured puts to lower my cost basis, or what that deal is going to be. I'm being very patient with this. I feel like the dust has not fully settled for UPS, but on the bright side, we are receiving a nice dividend soon on September 4th for $164. And it's if UPS does not cut their dividend, I feel like that's going to be the biggest silver lining for this stock. But at least in the short term, we got the dividend incoming. We're going to collect it for now and see where we can deploy this. So we can make more money off of this. So we can make more money off of this going forward. So as far as the cash position for the account goes, I have buying power of 11,000 and some change, but this is not all. This is just the cash. I had the rest of the cash is still sitting in SGOV, and that's another about 29,000 almost, let's just say. So we have some decent amount of cash that we can deploy, but because we're at all-time highs, I don't feel comfortable deploying all my cash right away. My whole strategy is hedging against the downside. So, but I am keeping my eyes open on what I could potentially deploy this cash on. So we will see. I was buying shares of Pepsi at one point. I was only able to buy 7.42 shares. As I was buying it very slowly. But since we started buying it, Pepsi has risen about 13, almost 14% since then. And I don't want to FOMO and buy into it. If it comes back closer to my average cost, I would be happy to do so. But by any means, I am not in a rush to do so. So guys, this is all I have for the recap. If you found value, please give a like and a subscribe, and please join me on my journey as I grow my portfolio. And if you have any comments to leave where we can discuss strategy and what I could cover in more detail for my portfolio, let me know. Until then, see you on the next one.